There's now clear direction that interest rates, short-term interest rates are moving because of the Canadian economy. We've seen the Bank of Canada dropping rates. There's been a high degree of adoption to Cora. Now the open interest is actually at levels above where sort of the high water mark were established before, where BACSs were trading. Seeing a lot more international players feeling comfortable without having that embedded credit in the BACSs. The Cora contract is really well adapted to compete sort of on a global scale. We see a lot more activity as we kick off our Asian hours, European hours, and then when we roll into North America, very solid adoption of the contract.
What is AlphaX US and how is it doing?
So far, things are off to the races. We launched on January 2nd, and actually on our website, we've just released the February numbers that have just been fresh off the press, and the business is doing extremely well. Now, just to kind of set things in context in terms of why we're doing this, we spent probably, if we dial things back maybe 3 years ago, we were looking at the U.S. market. A number of our clients that are dealing with us in Canada are dealing with us on a number of other aspects in the US. And this was sort of a natural kind of stepping stone for us in terms of the emergence of TMX Group as a global organization. As we continue to globalize, the US is the most liquid market. It sits right beside Canada. And we have a right to play. We have some of the US firms that are kind of operating in Canada, and we compete with them on a daily basis. So we first looked at opportunities to acquire venues. And again, if you set yourself back where we were 3 years ago, there were a lot of crypto sidecarts associated with a number of different venues. So we decided to kind of take a very strategic approach to the US equity market. We've seen a number of folks kind of come in, you try to acquire market share. It's a big challenge. There is a niche in the market right now that continues to develop around quality of execution. We brought Heidi Fisher in a little over 18 months ago, industry veteran. We ideated and worked very, very closely with clients. And from her joining, us finding the right market structure to operate this platform to the point we are today was probably one of the shortest launches that the SEC, the full approval process is probably one of the shortest that we've seen. So very excited about this venue. This sits well in terms of where TMX is going in the US. We own Verify, which is also doing incredibly well. And we will continue to look at ways in the US market that we can continue to grow.
How will the 10 new options on CDRs help the Canadian market?
Well, we're very excited by that launch, by the way. CIBC curated these CDRs, I'm going to say probably over the course of the last year plus. Having them do options on these, they've gained in popularity because it's not always easy for Canadian retail to tap into the US market unless you have a US account. And data to access all of that stuff makes it very complex, and those CDRs make it relatively easy for retail to do it. The natural succession to having the ability to trade those CDRs is to trade the options on them. 10 or 12 of these that are really that met sort of the minimum threshold of daily activity in order to qualify to have derivatives on them. So options were launched very recently, and we're very excited by the prospects of seeing that continue to grow.
How are you treating the regulatory change on OTC derivatives?
We honestly view this as an opportunity. We always work, obviously, very closely with the regulatory regime in Canada, the different regimes that basically dictate how derivatives should operate. And one of the things that we've always found interesting is that you have this dichotomy on OTC versus listed. And we've had a very high bar on our listed derivatives for a number of years now. And this is a bit kind of playing some catch up in terms of making sure that suitability and such are respected. And I think, we definitely welcome this additional rule.
How are you navigating the Canadian tariffs?
When you look at the current volatility, and I mean it's not only in Canada, it's now spread and it is a global phenomenon. We have built markets that are meant to be there to help support those who are managing risk. The platforms, although we're seeing record volumes, are very resilient. They're very robust, and we're seeing a lot of uptake. A lot of the products that were curated to help folks manage this risk over the course of the last 5, 6, 7 years to more adapt them to the environment, they're basically thriving in this kind of environment and allowing investors to do the work that they need to do in terms of hedging. Obviously, the broader concern for TMX and the broader concern for industry as well is volatility can be good for a period of time. If volatility goes on for too long, then investors are propensity to kind of sit on their money, sit on their hands, and we've seen that previously. It would be nice to see more stable markets in the coming weeks.
What is the investor sentiment right now?
I could summarize it probably in a word: uncertainty. And uncertainty is never good for markets. You have positions being taken one day, taken off the next. Tariffs are on, tariffs are off, full tariffs, and then partial tariffs. It's just not knowing kind of where the puck is going is really, really challenging for investors. And again, it's being felt even here in the United States.
What does the change in the Canadian government mean for the markets?
The premier that is basically has stepped down and is now sort of leaving office. It's difficult to be in these negotiation positions with the United States when you don't have a fully entrenched government. It's a minority. We'll likely be going to the polls in the next 2 weeks. It could be a little bit longer than that. And I think once we have that outcome, then you'll be able to have sort of more meaningful conversations. But there's certainly a coalescing view around what is happening in Canada and what is happening with tariffs. And I think everyone is very unified in terms of the perspective on this.
What are your thoughts on 24/5 trading in Canada?
I'm highly supportive, and I even challenged my team when we did this route for derivatives. I said, why is this not the case, on equity markets? So the whole emergence of crypto trading a few years back kind of sent a shot across the bow to more traditional financial markets around how you access liquidity. It has to be in a particular time zone. I think if this is done prudently and if it's done intelligently, it can absolutely work, and I'm a massive fan of it. We will look in Canada to basically do our part and see what we can do in terms of, being a very fast follower on this. We're just completing the modernization of our post-trade platform, which is CDS, that is set to go live at the end of April. Now, with that modernization kind of behind us in the rearview mirror, we will have a lot of ability to kind of innovate as it pertains to post-trade solutions. And this 24/5 is certainly something that we will be looking at as it's happening globally. There are different models that folks have looked at for this. One where you have a single open and a single close. I'm more of a big believer, and I mean, these are just my personal views. I'm more a big believer in the fact that you have to have sort of regional opens and close to kind of reflect the uniqueness of the time zone in which you're operating. So I can imagine Asia hour open, Asia hour close rolls into follow the sun into Europe, an open and a close into North America with an open and a close. It would facilitate a lot of the trading activity, and that would be one of the models we would certainly want to look at.